Hello, active traders, and welcome to Winning Breakout Trade Strategies. This is Ken Calhoun, president of the Day Trading University, along with my co-host Price Headley from BigTrends.com. Really looking forward to tonight's event. We're up to an astonishing 770 people registered for tonight's event. A really nice turnout. So thanks everybody for finding value in this 2-webinar series. This is the second of 2 events. As always, all information is for educational use only, not making any buy, sell, or hold recommendations. My quote of the week: successful people are simply those with successful habits. Hopefully you learn how to trade successfully with what Price and I will be teaching you in tonight's event. You may have seen me in Stocks and Commodities, Active Trader, the Money Show, Traders Expos, and the rest of it. As we get underway with tonight's event, I wanted to just quickly start by recapping our last week's event. Our 3 strategies were to look at wide range momentum candles, and these were the charts from last week. Second, acceleration ramps, where price action picks up momentum. The third strategy was gap continuation trades with cups and candles. Tonight we're going to be looking at ADX and how to use Wilder's average directional index for swing trading entries. We're going to start off by looking at our charts from last week. One of the things to pay attention to is last week our calls, the ones that I mentioned for examples, included these at the top: AMT, SLCA, PDI, PPC, and again, the pattern is a cup pattern with a wide range candle that you buy above, say 50 cents above the high of, on a continuation play, or gaps that continue in trend. So those are some of the very strongest of the charts out there. As we take a look at our Adx Signal and how to use it in tonight's event, I wanted to go step by step through some of the most important strategies and signals to look for. The main thing is to look for the red Adx signal line to break over 40. Now, how I set this up is to use simply the ADX line by itself. I do not use the plus and minus DI lines. I just use the red step 14 standard step parameter on the Wilder's average directional index signal. And what I'm looking for is a breakout on the day following, a day in which the ADX pierces the 40. You can see it comes from below here in AMT, pierces the 40. The way that I set up a trigger is to go long 50 cents above the high on a day following that. And again, what you'll normally do as you're trading is you'll often not see the breakout the first time that it occurs. You'll miss the big breakout day, but that's why this pattern is so useful, is you don't have to catch it the day of the breakout. You can wait till a day or two after to get into the trade. And that's one strategy that I really like. You can see here another good example from last week. I mentioned DLR. Notice, please, the red ADX signal line stays under 30. Okay, that's one of the key signals or key indicators to look for. If you take a look at this, you can see, for example, the red ADX line stayed under the 40 all these days. That's the trick. Wait until it pierces the 40 to the upside, and that's a signal day. And once it breaks over 40, even if it fades back down, it's better if it breaks 40 and holds over that, but even if it pierces the 40 and fades back down, you look for a new entry 50 cents above the high of the day in which that occurs. And that day may signal, it may well occur 2 or 3 days, even up to 4 days after the red ADX pierces 40. And what I like about this chart is that it gets you in on a continuation play. The ADX is very much like a volume control on a stereo, or the accelerator, the gas pedal on a car. And what I'm looking for is a good strong continuation at new highs beyond the signal day. So here's a good example. Even if you miss that day, which is very common, you may be off trading something else, but as you scan through your charts, you see, aha, here's an ADX signal where it did finally break clear of the 40. Then you go long on the 50 cents or so above the high of the day in which that signal is generated. So that's the signal day to pay attention to. Now, one thing I like to do is I will scale in or add to winning trades every 2 points on a stock or ETF swing trade. I'll use a maximum 1.5 point initial stop. So that's a very tight risk management and a good scale in or add to winning trade strategy for position sizing or scaling. Here's another good one, DYN. Notice too in this one, the ADX stayed under 40, finally broke out over the 40. And the entry signal is after it pierces that. Now again, even if you got in up here, it wouldn't have taken out a 1.5 point stop. It's kind of consolidating sideways, but it did move up, at least a point. So that's a good start of a breakout trade. So that's a good filter to hopefully help you stay clear of any choppy charts. Anything where the ADX is under the 40, especially under 20 or 30, is likely to be consolidating sideways. So what I like to look for are the ADXs once they pierce 40, like back here. Right here's ADX 40. It finally broke over the 40 on this day. So that gap day is the signal day. You can go long. Even if you take an initial stop, you rebuy at 50 cents above that high again, and you get in on a continuation play. Sometimes you will run into false breakouts. Not very often with this signal, but usually you want to see at least a few days under 40. Once it pierces 40, it will often do so on gap days. And that's one thing too to be aware of, is gaps or any major price action will generate an ADX over 40 signal by definition. It's a volatility indicator, which is why I like it so much. So anyway, you're looking for gaps that continue in trend, and the ADX breaking over 40 will often pick those up for you nicely. Now here's an example of a decent uptrending chart, but would not necessarily be good for swing trading. And who can tell me why? You can see it's got only a 1-point range. And how does that help you? Well, you just don't trade it. You could trade it, but it would take forever to make any money with it because it's only got a 1-point move in 15 days. But what role does the ADX play in that decision-making process? Well, ADX stayed under 40 that entire time. Notice the ADX never did pierce 40. So even though it wouldn't have hurt you to get in this on an uptrend, personally, I wasn't trading this because the ADX was so quiet. It was almost broke over the 40. What this is likely to do is an acceleration ramp, or this is the start of an acceleration ramp, where it's making, for those of you who weren't with us last week, remember the acceleration ramp pattern is simply one in which you have a narrow trend that then starts to take off new highs with relatively sharp breakout continuation. So this may be the start of a acceleration ramp that then finally breaks to new highs and explodes on up if the ADX pierces the 40. So this is a good early warning indicator. It's still not, necessarily highly tradable because the volatility is relatively low, and the ADX tells you that because the ADX stays under 40. Once the ADX does pierce 40, and that will do so if this moves up sharply enough to be worth trading on high volume, then and only then does it make sense to put on the trade. Okay, so it's a good discipline tool to help keep you out of low volatility instruments, or at least know when to scale in. Let's say you were trading this, which is fine. It's a very nice continuous uptrend, PDI, the ticker, but not a lot of risk reward, or not a lot of reward to it because it only moved up a point in all these days. That's why I like a 10% range. So a $30 stock should go say 32 to 35, not just 33. It is, however, good for a setup to tell us that it's likely to continue on up. Just keep an eye on it to see if it does do an ADX breakout over 40. Here's an example, PPC. You can see the first time it pierced 40 was back here on this particular day. See, the first 40 was there. So that's your signal day. Okay. That was the day in which ADX generated an ADX over 40 signal. The trading day would be 50 cents when it took out a 50-cent breakout, which would be, say, right there. That's 50 cents up from the high. So we stay clear of this false breakout noise. That's the first trade signal day. Use a 1.5-point trailing stop so that it would still stay alive, and it's off to the races. Okay, now here's another good example of how to trade this. Here's another ADX over 40 signal day that occurred just 4 days ago, right? So 50 cents over this high would be up at, say, what, 25.30, 25.40. So if you put on a first trade there, you could scale in at new highs up there. If you missed this trade, then you could initiate new trades at 50 cents. Again, not a trading recommendation, but 50 cents above the high of the signal day. So everybody see that? The whole goal of ADX is it does an outstanding job. I'm a former corporate statistician and quality engineer, and I used to do a lot of control charts and manufacturing control, and I know charts and data, and I've done thousands of trades, millions of dollars worth of stocks and ETF trades since the 90s, and I know how to trade. One of the things I'm looking for as a trader is what Wall Street traders would say, something that's in play or in motion. And so we're looking for those 50 cent above new high signal lines. Now here is the type of one that you want to avoid trading or trade lighter if at all, because the ADX is cycling back and forth. Anytime you have a chart where the ADX moves up and then cycles back down, moves up, cycles back down, price action is going to do the same thing, and you likely get a false breakout or get stopped out or whatnot. So that's another good discipline tool to keep you out of bad trades, is If an ADX cycles up and down above and below the 40, it's a good time to stay clear of it. Or, what I will do, the more experience you get as a trader, is I would still buy it on new highs if ADX recovers over the 40 and closes above 40 at 50 cents above 50, but I would use lighter share size because this is a riskier chart. So assign risk to the charts based on, if the ADX comes from below, breaks 40, and then comes back down, then comes up, and then down, and up, and down, and up, and down. That's a suspicious chart and not as good as, say, something like this one, where when the ADX broke over 40, it generated a good signal. Or this one, ADX broke over 40 for the first time and generated a nice multi-point win for you. Something like this chart, where the ADX cycles up and down, is less certain. Okay, ZBRA, another good example of one that comes from below, pierces the 40, and then continues on up. That's a very good chart pattern. And again, it pierced 40 today, so 50 cents above the high of the signal day would be fine, say 73.50, and then again, I would wait until it breaks. The better trade on this chart would be somewhere over, say, 76. 50 cents above the 15-day high is always the best trade. If you do want to look for quick bounce trades, wait until you see an ADX over 40 like this. Because it pulled back down, that's weaker than if it moved over 40 and held 40. Still, though, it's a good volatility signal that something's moving in this. I would wait for trade 1 to be there to the long side and trade 2 up at 76. So as we take a look at this, let's move on to our next charts. One of the strategies that I wanted to cover is how to combine gaps with ADX. And that's because gaps are the very strongest signal out there because of an imbalance of buyers and sellers. And as you take a look at how to combine this, let's take a quick look here. Gap continuation trades. We got a handful to look at tonight. One of the things I wanted to bring to your attention is that the ADX will always spike up on gap days. The question is, how strong does it move, and how do you put together a trading plan based on that? Now, for example, CLVS, a really nice gap continuation outside of a 2-day chart. It did continue on up. The trick is where to get in on a continuation play. Well, first of all, where is the ADX moving? It did break from below the 40 for the first time ever on a 15-day chart, because it was consolidating and choppy, which told us safely to stay out of it, until today when it broke over 40. And even if you missed today, which did a nice multi-point run for everybody trading it, we still have plenty of opportunities coming up in days and weeks ahead. So all you do is, again, draw a horizontal line. 50 cents above a high would be roughly, just somewhere over 61. That's around 60.5. Right, so 50 cents above the high is 61 exactly, as I said. So I was correct. Anyway, 15-day high volume with a red ADX line that punched up over the 40 tells us this thing's in play, and it's got some good volatility that's worth following up on if it's able to catch new buyers on a continuation. Let's take a look at this one. LB, the ticker. Again, this one, it's good example of, say, Darvas box trading ranges. There's a trading range 1. Here's another trading range here, about the same height. We want to see if it takes out new highs above this third region. Anyway, from a volatility standpoint and an ADX trading signal standpoint, what do you notice? Well, the ADX broke over 40 back here for the first time, and 2 days later it gapped up. It's a really good lead indicator that this thing is, my Wall Street guys would say, it's in play, something that's a hot instrument that the institutional traders are playing, and it's got some volatility. In this case, it was a downside move. It was a gap down that continued down. Only shortly thereafter, followed by a gap up that continued up. So even if, say, you tried to short new lows and got stop out, you take the gap up and you're whole and it's in the money and continuing to move on up. Okay, now what do you do? Well, ADX is under 40 today and yesterday and the previous day. So we wait until we get a new signal. Let's say you missed this one with that ADX over 40 signal. Here's another ADX over 40 signal and yet another one. If you just buy successive new highs, that makes for a good trade setup. Here's Whole Foods Market. You can see this one. Whole Foods, now half foods, right, on sale. Kind of a joke there. Anyway, gap from 48 all the way down to 39. And again, gaps continue and trend most of the time. This one, the ADX bounced over 40. So what you're looking at doing is trading outside of the range once it pierces 50 cents or so outside of the initial range that it carves, right? And right now we don't have a breakout or breakdown. It didn't move 50 cents above that or 50 cents below that. It's still in a range. But the ADX moved over 40 and again today. So that tells me, and in this case, today's trend was kind of a recovery trend or a bullish cup pattern. Anyway, I want to see if this takes out new highs or lows either for an intraday trade or even better for a scalp or a swing trade. And since I like to go in trend, I would rather just short new lows in this, right, under here and under there, than I would day trade on a bounce, but I would only swing trade short because it's a gap down if it takes out new lows with a specific pattern. Here's another good gap down continuation. Zulily, ZU, a gap from 47 all the way down to 37, a 10-point gap. It then promptly lost another 6 points. Now, ignore people that say gaps fill. If a gap's down, buy it. No. Professional traders sell gaps down and we buy gaps up. Gaps do not fill most of the time. Gaps, in this case, look at that. Did that fill? No. The gap went down and kept plummeting onto new lows. That's what gaps do. They continue in trend. How to trade it is look for the ADX. It pierced the 40. Back here it broke over 40. Told you it'd be a good uptrend, which it was. Now broke over 40 and now it's in a downtrend. And we see if there's a new downtrend continuation because the ADX broke over 40 and has a signal strength. Now here's an uptrend continuation, a good long pattern. I know a lot of people aren't comfortable with shorts, so we also cover plenty of longs, and here you can see an inverse head and shoulders, right? Left shoulder, head, right shoulder. It gapped up, and the ADX broke over 40 here. So that, becomes a signal day. Just identify that as an ADX signal or trigger day on any day in which the ADX comes from below 40, pierces the 40. Even if it drops, it's in play, and we go long 50 cents above the high. So you mark out a horizontal line. And again, you may be a few days in the waiting until, see, the ADX broke over 40, so that just kind of gives you a place to bookmark. Okay? It's worth keeping on the radar if it's able to take out new highs at some point in time. And for those of you who are fellow swing traders, I'll just use buy stop limit orders in my account, and whether I'm trading in my Fidelity or my IB account. And that way, I don't have to be in front of the monitors. When it finally does take it out, then boom, I'm in. And it's off to the races. So that's the type of play you want to look for. Does everybody see that? You just look for, and again, this is another example of gaps that continue in trend. It gapped up, no place in time did it ever fill the gap. It gapped up and kept running up a couple of points. So that's a really good pattern to look at, is minor gaps that continue in trend. Here's the last one, TYC, another gap that continued in trend. Who can tell me where would be the long signal? If we round or use, it would be 43.30 would be the signal that I would use. So let's say, let's echo the passage of time. And here we are. Let's say you're watching this and you missed the big breakout day. Well, that's okay. Welcome to the club. I may well be trading another 6 or 8 instruments and didn't see that one until that night, and oops, I missed the big run. Well, so what? ADX broke over 40. That's in play. Check. Where do I put my buy stop order? It would be 50 cents above the high. So in this case, with 43.30, who can tell me where would be your long signal? If 43.30 is the long, or the, I should say, resistance area, notice please how we don't buy the false breakout. That's why I use a safety buffer, as I taught you last week. We use 50 cents or so above a signal to get in, and we avoid the first 50 cents above because that often generates a false breakout, as this one did. If you'd bought the first sign of a breakout and jumped the gun, you'd be in trouble and would have taken a stop, or at least be in the red. So you don't want to do that. What you want to do is add 50 cents to that. So, all right, 43.80, that would be the trigger. 43.30 is the high on the ADX signal line. 43.3 plus 50 yields 43.8. So that would be the signal to get in. And so you just leave it alone. If it chops and grinds, that's fine. You don't want to trade that anyway. You want to trade it if it resumes its uptrend. This is, and I like the pure I like Price's visual example of a space shuttle that's taking off, and this is something that's escaping the Earth's gravitational well. Here's kind of the gravitational force, or the gravity that we avoid. Good breakout traders never trade inside ranges. Here's a gap that continued. Maybe you missed it. Well, this tells us that we are in a new, say, if you follow that concept of Darvis boxes, where the fellow Nikolai Darvis, how I made $2 million in the stock market back in the fax days before the internet. Anyway, you're looking at box trading ranges. Here's box range 1, right? It's got about 1.6 of a range. Here's box 2 with an exact identical trading range, right? That's 1.6. This is 1.6, right? 40.2 to 41.8, that's 1.6. Here, 41.8 to 43.4 is another 1.6. Exact identical duplicate range. So that's another reason not to buy right under the range. We want to wait until it safely clears resistance and gets in at, say, 43.8. All right, so everybody clear on that? Those are the type of charts you really want to pay attention to as a trader. You know, these nice ones that move, say, 52 to 58. Now notice, please, my charts, what I like to trade are instruments between $30 and $70 a share. It will capture most of these. Occasionally I'll trade things higher than that, say 70 to 80, 70 to 90, but most of what I trade is between 30 and 70, mostly 30 to 50 a share is my favorite, but since the markets ran up so high, I've had to push up the upper limit of what I trade. Anyway, $30 to $70 a share with at least 1 million shares a day with at least a 10% range. So for a $50 stock, it better be, say, 50 at the low and 55 at the high, or in this case 53. 10% would be 530, which would yield 58.30, which would be a 10% range, worth trading. Right? Remember, the other types of charts, the ones that are relatively quiet, like this one, PDI, does not have a 10% range. So even though it may do an acceleration ramp breakout and we're prepared for it, if the ADX recovers and pierces 40 finally, the fact that the ADX stays under 40 is a really good discipline tool to keep you out of trading very slow. And this is a nice steady uptrend. I like this trend a lot, but it wouldn't make you a lot of money, you know, I mean, unless you're trading 1,000 shares or 2,000 or 5,000 shares, because it only moved a point. So that's why I prefer instruments, at least when I trade, like this. It'll go, say, 53 to 59. It's got a 5 or 6 point run. In this case, a 6 point range, so it's well over 10%. It makes for a better overall trading candidate for trading setups. Okay, now let's take a look at intraday charts for breakouts. And I got a couple of good examples from my live room for you, and this is I'm particularly keen on teaching this. How much could you make if you knew the patterns repeated? Right, just like people, the best predictor of future behavior is immediate past previous behavior. Now, in my live tradingtheopen.com room today, I called this one long for my guys at 51.7. I told everyone to go long at 51.7. Paper trading only. Then I got them out near the pivot. Again, gaps that do fill often exhaust out at previous support as new resistance. And then we flipped short on this at 52.7 to catch a short on the way down. I got them out near that pivot and then got in on the short. So we got the winning breakout long and we got the short. There's two shorts, in fact, the 52.7, where's the other one? 51.80. That was my second short call there, and capitalized on the move down. Anyway, as you take a look at this, what do you notice about yesterday's chart pattern compared to today's? Pretty much identical. The open range breakout moved that far, moved the same exact identical distance this far. It pulled back down the same exact amount day over day, as though they cut and pasted this and stuck it over here, right? And then it ground down sideways, which is why I don't like to trade after 10:30, right? I like to trade the open range breakouts or pivots and then get out of the market when it goes into chop sideways range. Anyway, duplicate patterns. As you're looking for entries and exits in your trades, look for similar repetitive patterns and look for how you could potentially make money with those. You know, if you had known, as I did, that this would be a good long call at where 51.7, yeah, and move up and then scale out at the first sign of a rollover or pivot for a day trade, that's a really good pattern to capitalize on. Now, let's say you're looking for swing trading longs. Well, those we only want to buy new highs and new continuation. So here's another good example. CLVS, the ticker 56.3 was where I said to buy it this morning for all my live room members. And I got them out near the exact pivot rate because I knew 60 would likely be resistance. I think we got out even a bit earlier. But the point is, if you do nothing else, remember, don't trade inside previous day's ranges. Most of your stops, if you go back over your last 100 stops in your trading account, you will likely find that they were either ill-conceived pivot attempts, like trying to buy a bounce, ooh, that didn't work out, or you traded something that was trading inside the previous day's high-low range. Professional traders, because the high frequencies trading algos use OHLC, open, high, low, close data, they like to go in on things that are above the previous day's high or below the previous day's low. That's where all the volume comes from. And so if you're swing trading or day trading, you're looking to buy new highs outside of previous days' ranges. So you completely ignore inside range days and inside range charts. The very best high volatility instruments are going to be those that do minor gaps above previous day's highs and then continue on their merry way. So if you're doing a swing trade, that's a good trigger point, say 50 cents above the high. Or a day trade, you might use even 10 or 20 cents above the high. Everybody see that? This is a signature play. Signature Calhoun play is a minor gap continuation. A minor gap, by minor, I operationalize that by meaning, usually less than 5%. This one is more than 5%, so I do lighter size. But still a minor gap that visually is just slightly above the previous day's high, and then get in on the trade, either for a day trade or for a swing trade, and it's off to the money. So those are the type of charts that at least I like to look at when I'm figuring out how to make these things work. Okay? And I believe that does it for me. So anyway, thanks so much for being here. I appreciate it, and I look forward to seeing what Price has to say in his portion of tonight's event. Just remember, a quick recap. I've got a couple of minutes left here. Your best charts are going to be those that have nice strong trends with an ADX that breaks over 40, and you trade on the day or 2 or 3 or 4 after that. It's a really good predictive indicator. I don't like using RSI or stochastics or any of the other derived indicators because they tend to not be strong. As a former corporate statistician, I used to work at Ford Motor Company and Rockwell International and McDonnell Douglas and a consultant to dozens of other big companies. One of the things that I find consistently is that you want to focus on the outlier charts, or the ones that have the strongest trends. And what I found in the statistician background and quality engineering background was that there's too many false positives and false negatives. The alpha and beta errors, to use SPC and design of experiments talk, they will fail to correctly capture things like RSI and stochastics. Oftentimes will fail to capture very strong entries, and they'll also often miss or they will keep you in or give you too many false entry or false positives. So it will do alpha and beta errors. They'll miss good entries and they'll get you in on things that chop around. So you don't want that. What you want instead is an indicator in your hip pocket. It's a good rider downer that, hey, when it does do what it's supposed to do, you have a good trade setup that usually works after it. So it's a really good predictive indicators. ADX pierces 40, you look to then start to trade. And that's another really good way from a disciplined trading standpoint to stay clear of choppy charts and in on these type of charts that actually have a shot at moving for you. So anyway, this is Ken Calhoun from the original Day Trading University. Thanks for being here, and I'll turn it over to Price Headley from Big Trends. A brilliant guy. Really glad to be working with Price because our patterns tend to reinforce each other, and we have a very similar way of looking at the markets with our own take on it. So look forward to hearing from Price as well. Thanks everyone for being here.
For that. So what I did for my workshop students, again, because like Ken, I'm a big believer in actual proof of what were we recommending. This was recommended last Friday morning for my workshop students. I said, buy a June 565 call. Stock was trading about 582. That, for those who are new to options, that means a 565 call, right to buy it at 565. We're at 582 already. So that's worth what we call 17 points intrinsically. And we said, you know what, that option was trading about $25. So I said, that's a little expensive. I'd like to sell a shorter term option against it. So those of you who are familiar with options and the idea of cover calls, where you own a stock, you're selling an option against it to generate some income, we're just doing that in a little more leverage basis in my workshops to say, hey, we're going to sell the 600 call out in the June 6th weekly options a few weeks away. That's, by the way, right around the time Apple's supposed to have their 7-for-1 stock split. So I said, you know what, if we look at the profile of this, we did it at about 582. Now the stock, even with it pulling back today at 588.82 at the close, we're still, from our entry at 20.40, we're at 23.7. So we're up a little over 15%. Not a home run by any means over the last week, but given the choppy market, especially with the sell-off here today, hey, you know what? Apple's still making us money on that trade. We still like it as long as it doesn't close under that key retest low, as we said, which is 580.33, 580 and a third. If it closes below there on the daily chart, we're done. So if you're panicking on one day's move, if you're a daily chart trader, which is more of a position trade out over the next month, then you're going to basically get whipsaw. By the way, we're going to talk ADX, and one of the things I look for, as Ken was mentioning, yeah, I've got a few indicators on the chart. It does compress the price action, but I'm looking at a lot of things simultaneously. So the point on ADX that I would look for is when we're getting a buy signal on the %R, we're getting some validation from the commodity channel index in yellow, but the ADX is the green line. My charts are a little different colors than Ken's, kind of equivalent to what Ken's looking at in his red line. I'm looking at the green ADX line, but I am looking at the DMI lines, positive in the light blue and red is the negative directional movement. We're looking at the classic 14-bar setting, and I've got a few key rules I'll summarize on a few PowerPoints here in a minute, but what I like to see is, I don't mind it being at a low level as long as it's giving me some signs that we're not only crossing up off of a low level. You see as it crosses that declining directional movement. What does all that mean? If that seems like gibberish to you, what it means is that stocks making higher highs, positive directional movement in light blue is going up. Stocks making less new lows, the red negative directional movement is getting less and less, so that's coming down. So what's the definition of an uptrend? Higher highs, higher lows, right? So the bottom line is that what we're looking at here is we're looking at the start of an uptrend, and it's got the confirmation strength that I like to look for. Just like Ken's looking for strength in the form of a strong ADX, which can also be very useful here, I'm saying, look, it's still acceptable to me if it's just turning up off of kind of a dead money period. You see that ADX is going down or hovering below both of those directional movement lines since about mid-February into about right before the earnings. So about 2 months of dead zone. All the other traders that are trying to trade Apple through that period, ill-advised, by the way, if you're trying to scalp Apple, think you can peel off a couple of points. Don't try to play that game when you're stuck in a noisy, directionless coin flip kind of a market. I don't play coin flips. I play for a significant edge. And like Ken said, I test this stuff. So I tested TradeStation's great because it'll give me the ability to go look at an equity curve. You know what? Equity curve on Apple looks monstrous. Frankly, it's mostly been to the long side. You see that going back over the last since 1980. This is saying if you bought 100 shares of Apple, every time you got a buy signal and sold 100 shares short, you got a sell signal, and then followed my exit rules on just %R in this case. You can see that, yeah, shorts are not good, right? But the bottom line is that we're really trading with the trend in Apple, which is to the upside. Longs are very good. And you say, hold on, you're only winning 44.6% of the time. This is an important lesson I want you all to know. If you're trend trading, you've got to learn how to cut your losers quickly and let your winners run. Most of you are doing the exact opposite. So again, this is just past history. It's not saying I took every one of these trades, but saying, I know that the system works for me on these long trades, and the key here is that number right there. Most of you are looking at just win percentage and saying, I wouldn't trade it. It's got a less than 50% win percentage. I'm saying, you know what? If I can win 3.3 times, basically 3 1/3 times what I lose, then I'm saying, look, even if we did that, say in the case of this example, say, if we did it, not quite 50%, but if you were doing 50% and say you're only doing even 2 to 1, if I told you you're winning 2, then you were giving back 1, then you were winning 2 and giving back 1 on a 50-50 basis, you'd do that all day because you're going to make good money on average. You're going to average a half-point gain per trade in that example. So this one's winning 3 1/3 times as much as it's losing. That's the kind of stuff that encouraged me, and of course, the equity curve being that steady since basically 2005 is another sign that, hey, you're in a really good sweet spot trading these signals. See the last one hit here on that close, and officially on the next open, 572.80. So if you missed that first train, there you go. Now, I'm spending too much time on just one chart. I know, got to try to keep up with Ken's pace. He moves so well through so many different concepts. I'm going to try to mirror his success there in covering a lot of ground in a half an hour. So we've laid that groundwork. You can see in the short term, it's not quite as great, right? We're in a little bit of chop. So I'm saying, well, but that doesn't change my view if I'm a position trader. But if I'm a swing trader, no thanks. We're really not getting, even on that %R signal, the strong ADX upturns tried to start to happen right on that high, and you see what happened. It didn't confirm over that high. Confirmation for me means it closes in a future bar, preferably the next 5 bars above that high. 597.40, we're watching, no dice, and then it flips down, ADX rolls over, bye-bye, pass, that's a failed setup. So, we don't even take that trade. Even though %R is saying to buy it, we're saying no thank you, and we miss a bad %R trade because it's not confirmed by ADX. For those of you who are asking about how to do this on a day trade basis, when Apple is breaking out back here, we just got the daily confirmation signal back here, and look at what was happening back here. Like Ken mentioned, ADX turning up. That's what I like to see. Now, I don't really get worried about ADX until if it turns down, like it turned down right here on that next morning's little gap down initially. If we had closed under that low, I would have had a problem with that. But you can see it doesn't close below it, and more importantly, look at what happens when it starts to turn back up here at the start of the day on the 28th. We turn up, we're falling through, and this thing keeps on trending. We get a little bend right there. That is going to be our first stop. When it bends down like that, that low means if it closes under that low on a 15-minute basis. Now, this is something you got to watch every 15 minutes. Most people tell me that's too much for them. They'd rather watch it with a little bit more like an hour-to-hour basis, so they don't have to watch a screen all day. It's your preference. You know, if you've got the time, use the 15-minute chart for more of a day trade to sometimes 2-day trade. But the bottom line is, if you're more, and you're going to get stopped out on that one, 585.45, not there, but actually about an hour later, right there, 585 even. You're done with that trade because ADX is now rolling over. Even though it does end up coming back up, it takes a little while and it's slower. You're trying to catch those strong bursts. Look at the hourly with me for a second here. When this hourly turned up, there's your little upturn in the ADX, and you see it took a little bit of time to get through that first gap high. That was 568.84, and it took about 5 bars. That's about the maximum that I would let it take before I would say it's just too slow. I need to get on. You see what happens? It initially bends against you the next morning. Guess what? We got a %R buy. We got our CCI confirmed. We're outside the acceleration bands I talked about last week, and this thing's continuing to move on up. Look at what that ADX does. We didn't talk about ADX much last week. It keeps on grinding higher, and then it finally gets a little turn down. Where? Right there. That's your first place where I would set a stop if it closes under that bar's low. That was 591.82. And it trades under there the next bar, but it does not close under there. Takes some stops out, and then it goes on. Now, I like the closing stop concept of saying I'll wait to the end of a bar, and then I'll just place a market order to get out. And like Ken said, I only trade liquid instruments. So, you know, when I go in and I look at my various scans here, and I'm really not jumping back to the PowerPoint like I should, but I know a lot of you want to look at charts here. I look at scans. Say I'm looking at the hourly chart scans, and I'm looking for something that's either bearish or bullish. Right now, obviously today, the market got slammed. What's interesting about this, by the way, is nothing above 80 among the top 24 stocks that I use for weekly options. We'll talk options here in a few minutes. But bottom line is that, you know, that tells you you shouldn't be on the long side today, even as a swing trader. That none of the key names are making progress to the upside. In the meantime, you have a few of them that are hanging down here below the 20% level. And so the weakest names here, IBM, Chevron, Amgen, Goldman, and Monsanto trying to get there, not quite there, as well as Visa is below there. So, but IBM's at the top of the list. You know, so I look at that and I say, okay, you know what? Let's just look at Beamer and say, you know, hey, how's it looking here? You know, the stock's starting to roll over a little bit. Had a weak reaction to earnings last time. This is just now going to go bear confirmed from yesterday's low. It closed below it on the daily chart. We're already confirmed on your hourly chart. Your ADX is turned up. You can see, looking at where that ADX turned here on the 15-minute chart, if I was looking at it from a very short-term trade perspective, if it had closed above 187.25 on the 15-minute chart, I would have had to jump. You can see it tried to trade right back to that the next bar, didn't violate. Got a little test up into there, and then didn't go above it, and didn't close above it, more importantly. So right now, 187.25 for you quick traders would be my key number. And then if I'm looking at it here where %R started to first break down back here at the end of the day yesterday, 188.79, then basically, you know, you say, okay, that's a key number on that bar's high that we don't want to see it close above for a swing trade. It's still a couple points above. If you think, well, you know what, I'm chasing a little bit, you can wait until this hourly comes back up and tests back on %R above the 20% level. For those who are new to it, what that essentially means is if we're looking at a range over the last 4 days, it's 193 on the upside, relatively speaking, and about 186 on the downside, give or take a few cents. That's about a 7-point range. That's what %R is measuring. 7-point range, that means that about 20% off that low is $1.40. The bounce in the 7-point range will bounce at a 20% level within the %R calculation if we're $1.40 off of that. So that puts you back to about 187.50. Oh, by the way, that's right at the site, 187.46 of the lower acceleration band in purple, and the 10-bar average there, 187.49. So the market's got a pretty good memory of some of those key levels there. So I'd be watching that for a key test. If we bounce it in the morning, should be resistance. You could actually be looking to buy a put option if that happens. Now let me go in here and just kind of quickly remind you about this, and I want to talk options with you because I'm laying groundwork about stocks, so then you can get extra leverage as you then learn simple options principles here. Now, of course, like Ken was saying, Wells Wilder developed ADX and DMI just like he developed RSI and other tools. I don't use RSI either, Ken, so I find that one to be a little slow, like Ken was mentioning. But, you know, it was basically meant to measure strength of trend. The reason I use a DMI plus and minus is that a lot of people complain that while it measures strength of trend, it doesn't show you direction. And so a lot of people will say, well, if it's not showing you direction, well, then how are you going to trade it? Obviously, what Ken showed you is real simple. You follow price action. You follow the direction of the trend. You know, but for those that have a hard time with that, you can see who's winning the war between DMI plus and DMI minus. We'll look at a couple more examples of that, because sometimes if you get confused out there, and I always say I'll start with percent R, but if you get confused about who's holding the ball, the bulls or the bears, the DMI lines will show me in a basic sense who's holding the ball, who's in control. And then you'll see when that ball gets handed off. So ADX is then the strength of trend, and like Ken, I like the ADX even better. I'm using a 14-bar ADX as well as DMI to measure that gap between the DMI lines. Usually below 20, like Ken was saying, that's not something you want to mess with. That's more of a range or directionless choppy market. Typically, when you see that ADX start to cross up after it's been kind of dead, it'll be above the 25 level and then starting to move if we get the validation with percent R and the other tools I like to use. Like Ken was saying, above 40, you can get some really power moves, but be careful when it rolls over that a lot of times, you know, you want to make sure that it holds that rollover low on a bull trend or that rollover high on a bear trend. Otherwise, it would signal the end of that trend. So watch not just for the peak to roll over, but what a lot of people mistake is that they think, well, once the uptrend is ending, they can then bet the other direction. That is totally wrong. You must make sure that you realize that if a trend's been strong up, and then it's saying ADX is saying it's over, that just means you're out of the strong uptrend. It doesn't mean you're necessarily going into a strong downtrend. It just means now it could go into a chop city and you want to move on with your capital to something else. So like we said, he developed RSI, the average true range concept, a lot more. The DMI lines are something, you know, where a lot of people get confused, but I use it still to really tell me where we're in a really good kind of a steady trending market. The positive directional movement should stay above the negative in an uptrend. Negative should stay above positive in a downtrend. Most traditional people look for just crosses. I think that's a mistake. You're going to get yourself whipsawed and go need to buy a neck brace if you just follow crosses. So what I look for is not just when it crosses, but then it's got to follow through. So on a bull trend, I've got to see a close greater than that bar's high. Just like with a percent R follow through breakout, I've got to see it get extra follow through and close above that first high when the positive DMI crosses up. On the other side of the fence, if you're seeing it look like the red negative directional movement starting to cross, then we'll actually say, you know what, then the close has to be below that bar's low to tell me that, guess what, the bears are really truly winning the war. Otherwise, it's just yet another test point in this battle between the bulls and the bears. So, you know, before we go in and look at, you know, some option strategies, let me come back over for a second to show you DMI and ADX just on another key name. Anybody have any names you want to look at? Go ahead and pop up a name or two on symbols, and we'll pop them up here. I like to make it relevant to what we're looking at. So, for example, you know, say you're looking at, let's see, okay, UTX, thanks. So I'll just go with the fastest fingers there, Paul. Thank you. And then a couple of you have a few more, Rob and Philip will try to get to them. But, you know, so United Technologies, not usually a name I would trade. It's a Dow stock. But, you know, basically, you know, you can see it's had a really nice move here in the last couple of days on the downside. How would you have known that? Well, not just on percent R giving you a sell on the 15-minute. You can see that right now it's kind of chop city on your daily charts. But, you know, basically, look at that ADX, how strong on that 15-minute chart that ADX was validating as it just started to turn up. You see, for me, you know, and like Ken, yeah, we could have waited to cross 40, and you saw plenty of opportunity. In fact, that would be an even better one, Ken. You may have taught me something there to be a little bit more patient sometimes and wait for some of those. So that basically you get that real free fall that happens late yesterday and early today. So I'm always looking to learn from experts like Ken and not just assume that I know it all. And that's why he and I are working together on these, because I think it's like-minded principles. So like the mastermind concept, you get a lot of people looking to accomplish the same type of thing. He and I think a lot of the same ways about good trends are really what you're after here. And so you can see in UTX's case, a lot of people are going to be now all hyped up to try to trade this on the downside. But actually what happened in my book is there's the rollover on ADX. It went from 71.93. That's a very strong trend reading. But then it rolled over right here at about 215. So that high needed to hold to keep this downtrend on the 15-minute intact, 115.70. And what, It did hang in there. Nope, it lost it by a penny in the last half hour. Okay, so it was hanging for a little bit there. It was keeping you with it, and then boom, it knocked you out by a penny over that. So now you're saying, okay, even though percent R and even CCI look okay, I'm saying, you know what, now it's a little bit choppier. Let's leave that to the people that like to invest in hindsight. You want to be looking forward, not looking backwards. So the bottom line is that that'll give you a big edge against that. You know, we can look at tons of these all day and basically, you know, price line a wild and woolly one. And it is one that we do watch for the weekly options traders because it's such a high dollar stock. PCLN, it's $1,140 a share. Buy 100 shares, you got an extra 114 grand laying around. You know, hey, even if you do, I don't want to basically say, let me tie that up with a stock purchase if I can go ahead and buy options instead and get leverage. So the bottom line is that instead of paying that 114 grand to control 100 shares long or short, I can say, you know what, if you were catching it on the breakdown late yesterday and into today, you can see, look at that ADX just starting to turn. This is an ideal one for the quick 15-minute chart, even better than the swing trade chart. You say, this is where I'm going to sync up tying it into options. When you see percent R breaking down, that low was 11.49 yesterday at 3 o'clock. And then it closed below there at 11.46.95. So then it's saying short the next bars open, 11.46.57. Well, if I'm looking at that and I'm saying, you know what, if you're going to trade options here, we're going to get into options here next. I would typically be looking at the weekly options, which just so happen to be the in the money current May options, 0517s. These only have a few days left till expiration. And, you know, if you're just buying an option, you would not want to buy back where it was trading about, what, 11.46. You don't want to be tempted to buy the 11.40 puts out of the money. That's a sucker's game. Over time, you're gonna lose that way. I would tend to buy something like maybe like an 11.60 put here. That's a little more expensive than most people like to pay. But, you know, if we look at that option for a second, when we were getting that breakdown signal, we 11.60 put, and we were at about equivalent about 11.47. So we're about 13 points in the money, and you have to pay $18 for the option. That's $1,800. That's more than most of you intuitively want to pay. But actually, based on the intrinsic value, that's the better choice because you're getting 13 out of your 18 points are intrinsic value. The put at 11.60 means that you have a right to sell at 11.60. It's already down at 11.47. You can see that 18, you can see surged on up here today to 39. You know, one rule of thumb, of course, is that you should always take half of your money off the table if you can get a double on an option or any other vehicle for that matter. I like to book half of my profits and then trail my stops on the rest. So, you know, and sometimes if it's price line, I might even book it, you know, part of it at 50 and part of it at 100 and say thank you very much and move on. So it's a volatile stock. But the bottom line is that you can see, even on the option chart, we're not only picking up a little bit of an ADX move that was starting to kick in today, started to roll over a little bit late in the day, but also not just the percent R, but also the CCI, the Commodity Channel Index. When that thing's surging above plus 100, following through like that plus 100 breakout late yesterday was a pretty encouraging sign for this thing to have some extra legs. And it actually had what we would call a retest of that key CCI level, $23.50 on that option today. We wouldn't want to see it close underneath there. Now, quickly talking about options, because again, I tend to jump into the charts because I know that's what most of you want to look at. When we talk weekly options, this is one of my favorite vehicles. This is a little more aggressive. We're buying weekly options in the money. So Apple, Google, Netflix, some of the commodity markets like gold, oil, USO, of course, just had a big inventory number. Of course, I show QQQ, but we'll look at SPY. The spiders are one of the most liquid vehicles out there. And then, of course, other major stocks. Like Caterpillar is one that I was looking at as well here on some of my scans. Now, the point about weeklies is, of course, that we'll put out a specific alert. Like we did this past week, we did LinkedIn, did the May 2nd week, 150 puts. The stock was trading down at about 146. So those were about $4 in the money, and we were saying buy it up to 5.5. Now, we have some different brokers that can get our clients in and out automatically. It's called auto trading, and they said, hey, filled at $5.30 on average. They don't tell us any one account, they just say what the average fill price is. And so, you know, we said, okay, let's get a piece of that. Let's look at LinkedIn for a second last week. LinkedIn's another one of those wild and woolly ones. You know, social media, you know, whether you believe the hype or not, you know, my feeling is they're going to be volatile stocks, obviously, because there's a lot of questions about, you know, how well these companies will truly monetize their fairly high valuations. You can see they've been getting slammed here in the last several months. Stock's well below long-term 200-day support there. And so bottom line is it broke down, then it had a little, what we call retest on %R, then it started to break down again last week. And so you can see down here as it started to break down here on the 6th, I call this triple confirmation. So you're breaking down there, you're breaking down here on the hourly chart, and you're breaking down on the 15-minute chart. There's your strong ADX again, steady up on the hourly, and still up on the daily in that window there. So we were seeing all those things synced up across all those time frames. Think about it. It's like getting the day traders on your side, betting to the downside, getting the swing traders betting to the downside right here, and then, of course, the position traders are already bearish if you're looking at those signals all lined up. Now, of course, from that, then we were able to take not just a 30% profit on the first piece of the position, but also, what do we take, a 50% gain on the rest. We got out at 8 about 2 hours later. Now, we don't always, we got in at, what, 11:58 on the way in there. Yeah, 11:58 in the morning Eastern time, 2:02 Eastern out the same day. Now, that's not usual. We're not going to try to day trade, but we're going to look for, how we can get a piece of the action here. Now, one of the things you saw me starting to talk about as we were talking about IBM, we'll come back to that, is not just the stock, but also what option might we consider. We did that with Priceline too, right? So if we're looking not just at a stock chart, but also at an option chart, the bottom line here, and my time's almost up, so I've got to go ahead and hit on one or two more of these key points, and we'll hand it back to Ken and we'll wrap it up. The bottom line is the option chart tells you some other information. I've even talked to options experts that have been around a lot longer than I have, and they're like, why are you even bothering looking at an option chart? That's just the pricing of the option itself. Well, because that option is experiencing time decay, time erosion, because we know options are a time-limited asset compared to the stock. If you buy Apple, IBM, those stocks should be around probably longer than you and I are around on this realm. But bottom line is that the option, of course, has a limited time. The volatility of this pricing of that, of course, also makes that option chart look quite different. If you buy the wrong type of option, that stock stays flat. If you're speculating with at the money, what I would call ATM, at the money or near the money, you may hear them call it, say the stock's at 100 and you buy the 100 call or put, that's called at the money. That option has the most time premium in it, has no intrinsic value, and thus all-time risk. If it just flattens out on you, you're toast. Same thing with an out of the money, the OTM option, same idea. So what I'm saying is that's where if the stock's at 100, you buy the 105 call, you say it's going to rally to 110, you think the out of the money option is my way to go. Well, you know what? You may make more money when you're really right, but the times where you're slightly right or you're kind of not right or wrong, where it's just flat, those are the wrong choice. So what I suggest is that you buy the in the money option. These are the options. If the stock's at 100, you're bullish. I'll buy the 95 call. Yeah, it's going to cost me a little bit more. I'm not going to buy as many contracts, but on a risk-reward basis, those are usually the better choices. So if you're bearish and the stock's at 100, you buy the 105 put. So, it's $5 intrinsic in either case, and you're probably going to pay a couple bucks a time, but the bottom line is that's usually your better choice. So, for example, we mentioned IBM. So, again, these are just educational only, not specific recommendations, but, I said, hey, kind of like the way that one's looking here. Yeah, it might still have an occasional bounce here. There's weekly options that go out to next Friday right now. Right now, the monthly options are going to expire after tomorrow's trading. So don't try to day trade this tomorrow so much as saying, you know what, if I was going out and looking, stock's 186.5, and say you're going out and looking to the May 23rd, next Friday, and you go to the 190 puts, for example, we look at that option chart for an example. Now this is what I like to see. I'm seeing not just that %R has broken out and this thing's really surging here, and yeah, I'm not early in this sense, but I can still manage my risk accordingly. And say, you know what, okay, we're looking at this and seeing that breakout this morning, not just on %R, but also CCI, on the 15 and on the hourly, getting that breakout, and then the follow-through. And so that's that extra kick that you look for. Now you can see the only problem is this option's high is up there at about $5. 502 is a recent high on it. It's only a weekly option, so it's only been around since, in this case, early April. On these really active ones, they'll list out several weeks ahead. But bottom line is that I'm saying, look, this thing's trending. I know that my last high this is seen in the recent look back period is 4.25. The recent low over the last roughly 30 bars is down around $1.50. So it's about a 3-point range. So I know that if this thing comes back down about 20% off of this high, it's about 60 cents off of that high. Somewhere in the neighborhood of about $3.60 is going to be where I'll see another %R test under that 80% level. So if it gaps up, I probably wouldn't chase it. If the stock gaps down, the put, of course, will move up. But if the stock actually doesn't gap down, but actually stays flat or even moves up a hair, we could get a real nice entry on that. And then if we're wrong, we kick it out quickly and move on. A big part of the game is knowing how to get rid of your losers quickly and let your winners run. But this is one that has the potential to start to really pour it on here. And so we'll see how we do here on that one as another example of Ken and I liking to put our money where our mouth is, call some stuff out and say, okay, you know what, make sure you manage the risk. The one thing I don't want to hear is that you said, I bought that thing, and then days later you sold it when it didn't work out and you got whacked on it. If it's not working, you're going to tend to get in and get right back out that same day. So don't be surprised when that happens sometimes, but the goal is keep your losses short, cut your losses short, let your winners run. As usual, time has flown on me, and bottom line is that we want to remind you that you want to obviously get on our various lists if you're not already on there, to make sure you're getting invites to future webinars. In my continuing education, you can go to bigtrends.com/free, and that'll get you to a special page that we set up where you actually can see that we give you a whole lot of information through our Big Trends complimentary lifetime membership, where you can get all kinds of daily training through my daily trend watch on various trading techniques. You get a free ebook access, and you also get invitations to future live trading webinars with me. And I know Ken and I will be doing some more of these. And then Ken, you want to come back and share how you're doing yours as well?
Yeah, so much. Thanks so much, Price. That was very, very intelligent. I learned a lot from you whenever I learned from you, especially the synergy on the idea of when the ADX loses back under 40. It's neat. We both keyed in on that same exact level, and you're exactly right. When ADX pierces 40, the better trades, or if it stays above 40. If it loses the 40 and trends back down, then that's a good time to scale out or tighten in a stop. And I also liked your point, which is exactly correct, which is a great uptrending exit does not therefore make a good short reversal trade. You get out when you're in the money trade on good strong breakout continuations, and do not then flip to short as just because a good trend petered out doesn't mean you get into a reversal play as well. So.
Yep. Absolutely, thanks. And I love seeing how you're trading at above 40 and really catching some of those moves. And even when somebody asked about United Technologies, and I said, actually, Ken's point about that move through the 40 level on ADX was actually where the thing really tanked and really got your best part of the trend. So I'll be looking at that and running that through some additional tests as well. So thank you for sharing all of your years of knowledge and what you've learned, because I'm always learning from folks who trade for real like you do, and I do. So
yeah, right.
Always be real world trading, not fantasy trading like a lot of these other places.
Absolutely, yeah. I really like your numbers too. You're really good risk management. Yeah, you pack so many good tips. The thing about 50%, even if most of the Chicago Merc traders, they may be right 22 to 28% of the time, and that's an irrelevant metric. It's how much money do you make when you scale in and keep the tight stops. So you're absolutely right too. So really neat to see the synergy, Price. You're a brilliant guy, and it's a really pleasure to do the webinar with you tonight. So
as are you. I really enjoyed it, Ken. I always am learning from you, and appreciate what you share with the group tonight as well. And I think, hopefully, folks, let us know how you like these quick, fast-paced sessions, half hour a piece, rather than going on individually for an hour. What do you think? You like the speed? Are we going too fast for folks? We always are curious to know what your feedback is, but definitely share it, because that'll motivate us to do more of what you liked and less of what you didn't. So thanks for the feedback. Actually, getting all positives there. So love to see the good good speed. I'm glad we didn't blow people out of the water for the most part there. So that's good to hear, Ken. Thank you so much. You just really nailed it.
Yeah, thanks so much. I know it takes a little getting used to the 30-minute format, but with everybody so busy, and I've tried to sit in these slow-paced, other people hour-long multi-speaker snooze fest. I think most of us aren't that patient. At least if you're like me, we're both built for speed. We're fast, focused, like Eagles or Hawks, very intelligent and sharp, and give you guys some actionable tips you can actually start off using and get the perspective of how professional traders work in very quick format to make good use of your time. So you get more information that's actionable from industry, professionals that have credibility, and do it quickly. So what do you guys think too? Let me just ask for one last call for feedback. What did you guys like best about tonight's event in terms of the pacing and the content? Was it good for y'all? I'd like to, both Price and I can see everything you guys are posting, so appreciate that. And we'll wrap up here in just a minute. Hearing a lot of excellent. That was great. Good speed. Speed and timing good. Like half hour good. Like this arrangement. Good speed. More info is better. Yes, great. Thanks. All right. Well, thanks so much, everybody. Appreciate it. Good to hear. Well, Price, thanks so much. This has been a really neat world premiere, seeing the first time in history, the two of us, we've known each other for years, but first time in history we've shared the stage together. So a real honor to work with you, and I appreciate...
Same here, Ken. A lot of fun. You really nailed it, and just make it fun. I can't wait to come back and do some more of these sessions with you, because I think people really benefit from two minds better than one, just to be able, and especially when we've got the synergy of talking about how we both like to do things with tools like Adx and others. Obviously people can see that they can apply those same indicators on their platform to start to learn how to start trading more effectively.
Right, and with nearly 800 people registered for tonight's event, a real blockbuster. So great to see the popularity, and thanks so much, Price, and thanks everybody for being here. Appreciate it. Thanks, Price, and we'll wrap up.
Thanks, Ken. Appreciate it. Good night, and trade them well, everybody.